Good morning, everyone, and welcome to the On Time On Target morning show for Friday, March 26th. If you haven't seen the pictures of this tanker in the Suez Canal, you have to check it out. So, 400 million an hour is what it's supposedly costing with that thing being stuck there. But the metric I heard yesterday, which is kind of amazing, is if you took that tanker, to give you an idea how big it is, and stood it on its edge, or excuse me, the length of the tanker, if you will, is longer slash taller than the Empire State Building. That's kind of crazy to even imagine how big this thing is. But anyhow, that's not what we're going to talk about today. What we're going to talk about today is banks. The Federal Reserve came out yesterday and relaxed some capital requirements for the banks. And you may think, okay, blah, blah, blah. Well, it's kind of a big deal. They relaxed the capital requirements, which is roughly, we'll get into it later for the question of the day and we'll pull up some specifics, but roughly the amount of cash that they have to keep in reserve, right? Banks make money by taking your cash and everybody's cash, turning around and making net interest margin off of that by loaning it back out. Well, if they have to keep a certain amount of that cash on hand, well, that restricts their ability to be profitable. Or restricts their upside, if you will, because they can't turn around and loan all that money right back out. So the reason those things are in place is, again, to add strength to the financial system, so we don't do what happens in 2007 through 2009 with the global financial crisis doesn't happen again. So that's why they're there. Also, big banks are not allowed to buy back their stock. So the issue there is that if they're healthy, they should be able to buy back their stock, right? So these capital requirements are now, the gloves are off, so that should mean a move up in banks as well. So that's what we're going to talk about today. If you're joining us on replay, go ahead and click on the notifications bell, as well as subscribe. If you want to join us live, we're in $25 to be in the room live. We have a chat window and a Q&A window for you guys to ask me questions. So ask me anything you want, and I will answer while we're on the air. And with that, let's go ahead and get started. All right, welcome back, everyone. Here is our lineup card for today. Make sure you have your chat window set up correctly and your Q&A window set up correctly, as well as pay attention to the the disclaimer there, which tells you it's a financial education presentation. You have to do your own due diligence before acting upon anything you hear this morning. Full disclaimer information is available at ototnow.com. All right, it's finally Friday, March 26th. March is almost in the books, which means 1/4 of 21 is almost in the books. So all of the, as far as the, metrics for the first quarter of 21, all those will be rolling in here next week. So we can kind of see where we are for the year. All right. Mission objectives today: grow our money, protect our money, live off our money. Again, looking to grow our money with investing in banks, getting into the financial business. There are several ways to do this from an individual stock perspective, but primarily, the most outright is owning something like a Wells Fargo or a Citigroup that is a pure bank. You see them listed down here. JP Morgan has both sides, right? You have JP Morgan Chase, so they have banks, they have credit cards, and they also have an investment banking piece of that. They also have a trade desk that pulls in $100 million, a year. So there's all kinds of ways they have to earn money. And then you get off into kind of your pure investment type banks like Morgan Stanley. If you want to own them all, KBE is not a bad way to go. We'll show you those charts a little bit later. All right, our question today is, what are the bank capital requirements? So again, I will review those for you. All right, some longs and shorts going in the room there. Just saw a couple folks show up For our flow, it'll be long, short, open, short, long. Again, primarily focused on long-term investing. We're going to do a market review by going around the world, take a look at the futures, headline review for the day. We'll go over those names. We'll get in the short-term execution with I like the longs today better than the shorts for day trading. That Buybacks is really a tempting story. That's the SPAC that's taken WeWork public. So I have a big plans for that today. It looks like it's gapping up about 8%, and I'm actually shocked it's not gapping up higher. All right, we'll execute the market open and make our transition. Contingencies and academic resources are available on the website. All right, let's go over to TD Ameritrade, Think Pipes, and take a look at where we've been. And again, here's our, basically uptrend for the past, 9 months or so through a contentious election. And the outcome of that has been kind of straight up. And we're taking a little bit of a breather here. Still have up channel lines here put on the screen. Had a nice day yesterday of recovering some of the losses from earlier in the week. Today could go either way. I think personally, Fridays tend to be up. I think there's kind of optimism in the air sort of thing. So I think we'll see green across the board today, but we'll see. Obviously, tech has been in trouble. If you are tech heavy like I am, and if you're with me, your portfolio is generally tech heavy. Yeah, we could use a little break, right? Go make some money back. We did yesterday. It'd be nice to see a bigger move up today. When you focus in on the 5-day, bring it here, you can kind of see here was yesterday's move up. Didn't quite make up the rest of the week, but today certainly could. We're not that far away from actually getting 0.5% from getting back to where we were on Monday, and then maybe setting the board for going higher next week. All right, here's our names for the day. We got BOX long, LB long, which is LB brands, and then NEO and the Chinese names. You can pick one. Basically, there's several that are gapping down based off of the big hit on Chinese tech yesterday. I don't know that they continue to sell off is the issue. I think that move was so brutal yesterday that, again, is kind of brutal this morning already. That to me seems more like a bottom, so I'm not going to trust these. But I am excited about BOX long and LB long. Okay, let's go ahead and take a look at the futures. Go over to cnbc.com and refresh these real quick. These were NASDAQ was heavy into the red earlier, almost 0.2%, almost back to even. I think by the time in 9 minutes, I think actually it will be back to even. That's my take on the day. Europe is across the green across the board. Asia pretty heavy into the green, 1.5% up across the board. We do, let's see, these are our numbers from yesterday. So again, the market was up, NASDAQ barely in the green, right? So remember when the tech snapped back last time, they had a nice, I think it was a 3.5% day move up. That generally is what happens in tech, is it sells off, sells off, sells off, and then it screams higher. So we shall see, but I think it happens today. The 10 years back in the news this morning. This is a kind of big move for the 10-year. Even though it's obviously not a big number, but again, we were below that. We're right around that 1.6, which everybody's okay with, and then 1.7 seems like to be the end of the world. But we'll keep an eye on it. I'm not too concerned about it today. Oil back above 60 on Suez Canal blockage fears. I guess that's pretty ugly. That is really not a good thing as far as getting that thing out of there. Gold and silver basically flat. Bitcoin was up earlier, yep, at around 53. If you followed the GBTC late yesterday, it kind of separated itself from the price of Bitcoin for a while. And I know Predator and I've been talking about this, how like the VXX doesn't really track the VIX all that well. Well, the GBTC was acting separate from Bitcoin yesterday. So generally that means there's a lot of players moving in and out of those positions. But it was kind of a weird move yesterday in a GBTC. Okay. All right. Let's go back to the US and take a look at the headlines. It's kind of funny. You have this big shipping thing when that's kind of like the theme of the day, is this big shipping container in the Suez Canal. But, I thought that was interesting. Yeah, there's your 400 million an hour. There's that guy. It doesn't look that big in this picture when you think, yeah, it's longer than the Empire State Building is tall. That's big. I like, my brain, I probably can't even imagine. Even after saying that, I still don't think I can truly imagine how big that is. That's crazy. Okay, this is an interesting one. We'll keep an eye on this. SoFi is a finance firm that is going through a SPAC to become public. IPOE is the ticker if you want to research this, because I'm researching it later today as soon as we're off the air. Give amateur investors early access to IPOs. Well, that's against security laws. So I don't know how they're getting around that, and I don't know why anybody's saying this. So there must be some loophole or angle I don't know about. But in order to invest in an IPO, you have to be a accredited investor. So $1 million, individual has to make over 200,000 a year for a couple of years. Couple has to make over 300,000 a year for a couple of years, or you have to be licensed in the finance industry. So these are not really rookie investments. And so if they're going to give amateur investors early access, it's like I don't even know how they're going to do that. Probably through some derivative is what I would imagine. But so you do that, and a bunch of amateurs come rolling in, their IPO tanks, and then somebody commits suicide. It's like you really want that sort of circumventing of securities laws on your hands. I don't know. Anyhow, we shall see. All right, here's WeWork. Here's that go public through SPAC deal with BowX Acquisitions. BowX is sitting at 1025. I'd even nibble that early if you're interested in that thesis. I am very much. Jack Dorsey always looks like a monk. I don't know. That's an interesting choice on his part. the look that he has taken over the years, I'm always entertained by it. Looks good on him, though. Our other long Victoria's Secret LB brands jumps on raised profit outlook. So again, part of that opening trade, LB moving higher today. All right, let's talk banks real quick, and we'll move over to. Well, we'll check out FinViz real quick here. So get rid of this screen and look at JP Morgan. So JP Morgan's the best to breed in the banks. Again, why do you invest in the banks? They're safe, kind of. They're pretty stable, I would say, over time. Even I do have March on another screen, so I'll show that here in a second. But the bank has screamed higher. They're still cheap if you look at PEs and traditional metrics, which I like. I'm not poo-pooing those. I'm just saying they are unbelievably cheap in compared to everything else, right? They generally, most of them pay a dividend, and they paid it all the way through. You'll see on the next screen, all the way through the big sell-off last year. Their metrics are all pretty good across the board. Nobody's shorting banks. So pretty stable investment. If you're going to get in here, I would go JP Morgan for best of breed. The number 2 is Bank of America. I think there's a leadership. Obviously, JP Morgan is fantastic. Also, Bank of America has a good leadership team, which has led them to kind of scream higher, if you will, since the election from 24 up to 37. Can you buy into them now? Well, yeah. I mean, they are traditionally cheap. It just shows you how cheap they were coming out of the sell-off in last March. So let's see that on a bigger scale by going over to Schwab. So what you're seeing right here is six charts. The top 4 are the ones we've been talking about. You see that, even JP Morgan sold off from 140 down to 70, 50% sell off, not quite. Bank of America from 37 down to, 18, almost a 50% sell off. And I also put a regional in here, LCNB, which a few of you are familiar with, sold off and has come back really pretty impressive. And of course, the KBE is a way to own them all. I've been in this several times. There's KBE for banks, KIE for insurance. Little different take on the same sort of theme. But yeah, it sold off all the way down to 25, basically a double since. So when you look at these, had the big sell-off not happened, this is really, if you take a line from February to February, if you will, that would have been just steady growth. So what did this turn out to be? It turned out to be a huge buying opportunity on the way down. What I would like to say, though, is when you look at these charts, you can see the dividends on here across the board. So it's pretty impressive. They're very different from 2007 and 2008, where banks were getting crushed and worried about failing. Is in the global pandemic, actually a lot of money was flowing in through the CARES Act and the sets of stimulus, which I know people aren't starting to balk about, but a lot of money flew in, came in, if you will, to really backstop the banks, and increasing those capital requirements again makes them a lot stronger. That's why now that largely the pandemic is behind us, or we'll see, but is starting to take the gloves off and letting them kind of take more risk, which means make more money as well. So again, to summarize, if you want to get into banks, JP Morgan's your best bet. I can see a case for Bank of America being a number, a second bet, or a smaller price point if you got a smaller account, if you will. Those I would stay away from the rest of these unless you happen to if you're already in them, that they're fine, hold them, but I wouldn't necessarily buy in here. All right, let's switch over to get ready for the market open to TD Ameritrade Think Pipes, and give me a second to get set up here. All right, welcome everyone to the On Time On Target play of the day. You have three screens in front of you on the TD Ameritrade Think Pipes. We have 15 seconds to the market open. At the far left, we have the SPY. The futures for the SPY are in the green, and the NASDAQ is almost in the green. We have two longs, which I like better than the short. BOX long is my favorite. LB is also a long based on earnings. And then we have NEO over here. Short. All right, that is our opening bell. I'm really looking to take a pretty quick entry. Maybe a 10-cent stop on BOX here. It's only up 6%. So in a perfect world, it would sell off a little bit before it comes back higher. We're going to let it establish the low of the day and then get in. Right now, I'm targeting 10.4. I'd like to be able to move that down. And again, this is going long. Let's go 10.38 as far as our entry point. Again, covering that low of the day. Watching NEO going higher over in that right-hand screen. We're filling the gap. We don't do a fill the gap trade. LB is not even hardly moving, so not a lot of volume there, but plenty of volume here in the BOX. Let's go to 10.36 with the 10-cent stop. So it'd be 10.36, covering that low of the day. Here, I think the selling is starting to wane. So we're waiting for the move up to 10.36. Into the second minute of the day, no issues with that. You can go 3 to 4 minutes of this kind of selling off before something flips and goes higher. We're still good at that 10.26 at the low of the day. So 10.36 going higher. We shall see. LB's not moving, so let's get rid of LB and put Baidu short, BIDU. That's backing up as well. So Chinese names are backing up. Let's see what else is on my list. We're still waiting for this BOX 10.36 entry to go higher, but obviously we have to be patient. Plenty of volume. If you're looking at the volume, several hundred shares in both minutes that this has been open. Getting some love out of the market. All three, even the NASDAQ, are in the green. NASDAQ's up 25%. So tempted to go. Let's go 10.35 on this entry. So 10.35 covering down to, well, 10.25. Well, we're going to get some better entry here. 10.34 is now your entry. Let's go 10.33 again, entry for long. We're going to follow this down and get a heck of an entry on this. So when it flips, I think it'll flip hard. We shall see. Let's go 10.32. Again, waiting on that entry. If you took it where I was talking about a pre-market, you're probably in at about a 10.32-ish, 10.30, 10.32-ish point anyway. All right, minute 4. This is when I would expect to see that reversal to go back higher. Again, 10.32 is going to be our entry point that we're waiting on. And covering down to 10.22, which is low of the day. It's going to make me look at other things. Don't miss that entry though, 10.32. That's what you're looking at. Lucking up 3.5, 3.6%. I saw it was at 9 earlier. I like that. It's a pretty tight range here on this BOX. I'm pretty shocked about that. Not flopping around much at all. I only have about a 6 cent range there. If it gets to the end of minute 5, I'm going to bail on it. We're on minute 4 right now, but we're keeping an eye on it. There's minute 5 just started. So if this doesn't reverse by minute 5, I'm going to give up on it. If it does, though, I'm going to be happy with it. So we shall see. All right, let's see. Neo covering back up. See what else is in our long play. SWIR on low volume. These guys were gapping up earlier, coming out of they got beat up a few days ago due to a cyber attack. They're kind of coming back from that. All right, last minute here for 1032. It appears it is not going to cooperate, so we're going to end up bailing on it and start seeing what's going on. I don't think we got a trade this whole week after getting so many good trades last week. All right, there's the end of it. So if you can take this later, it's on your own. I'll just kind of draw it on here, but 1032 is where I would set that. 1022 is the lower bound, and again, you're going higher with a 10-cent stop. I'm not going to stay on this screen, but anyhow, that's your trade. So you got 1042 up here, 1052, and then 1062 would be your exit. All right, let's take a look at what's going on in the real world out there. All right, there's Luckin at 5%, also LKYSF, and some of the psychedelic names. Mineral moving up. There's your Bank of America. So the banks are going to move up on the news from this morning. That makes sense. All of them were in the green last time I looked pre-market. There's your Bitcoin, GBTC. Let's pull that chart real quick since I was talking about it. Yeah, I got all the way down to touching 40 yesterday. So I think the market opened and Bitcoin started moving higher. And then you saw this big red sell-off here. That's when I was looking at it. It's like, that makes no sense. But if I see that divergence again, what I wasn't processing real time as I was looking at it was there was an opportunity, and I'm not sure it's foolproof. Nothing is. But when Bitcoin was going higher and GBTC was selling off, there's probably a trading strategy looking for that exact mismatch, because then you saw GBTC correct that significantly or close that gap, if you will. So a gap happened and it closed. So interesting. Obviously, you think I like Bitcoin here and GBTC, so I do think it goes higher. There are some other Bitcoin funds that are opening, which are going to take some money away from GBTC, but I'm not worried that will be enough to ruin the thesis there. All right, lucking up to 6%. A lot of names in the green. Let's see what's in the red. There's our Neo in the red. Clickstream down a little bit. Laser. RBLX has actually sold off. I know it dipped below its direct listing price, but then it popped back up. So 64.50 is again where everybody had bought it if you bought it first day. So it's above that after being below that temporarily yesterday. So I am adding some of that to some accounts this morning. Palantir, so not too many names in the red, really is kind of the big picture. So I do think we're setting up for that big green day, not necessarily a rip your face off Friday, but big green day. All right, let's go over to capital requirements here real quick, and we'll close out for the day. Well, I was going to check that chart, see if it actually happened. Nope, never did trigger. So kind of surprised. Wonder why that's getting the negative attention, or why it's selling off. I'm pretty that does not make sense to me. But anyhow, anybody who did trade it probably had that 1022. So there's interesting, if you get in here at all for whatever reason, if you have that stop that's a couple cent below the day, the learning point here is if that's when you need to exit, because if you don't, generally a lot of folks are exiting here and you can get caught in this wave. So you really need to be smart and diligent about your exits so you don't end up costing yourself. If you delay just a few seconds, you instead of risking 1R, had we been in the trade, which we weren't, but say somebody took it here, you can cost yourself another R right away, and that messes up your math completely. So, all right, let's look at capital requirements going back to CNBC. And again, Investopedia. So what are capital requirements? Standardized regulations in place for banks and other depository institutions determine how much liquid capital that must be held, certain level of assets. So what does that mean? Percentage of assets, right? So whatever they have to keep, X amount percentage wise liquid, if you will. So, whenever you wonder if you walk into your bank and it's not really, people don't really deal in cash, but think of folks that do. You walk into your bank and you have, $200,000 in your bank account, and you want to withdraw 100,000. Well, they may not have that on hand. They may have to make a few phone calls and get it. Remember, banks can borrow from each other, even if they're not the same, right? You can borrow back across town and things, and then that's a ledger entry, and then that gets backfilled. So that's how they kind of handle that situation. Like, sorry, give us a few minutes. We're going to need to make a few phone calls and move some assets to get you your cash, or they'll set an appointment for you to come back, which is generally more likely. All right, expresses a ratio of capital requirements based on the weighted risk of the bank's different assets. Tier 1, 4%. Let's see what else. Predator, I see your question. Good question. I don't know. We'll see if we can tease an answer out here. Generally, people talk about big banks. I could see it different ways. I keep seeing a tier category. So I would imagine it's tiered out across those things. We'll see if that's in here at all. No, it appears not to go into that level of detail, but I have heard that tier 1 before requirements. I think that's big banks, and then I'm sure there are lower tiers that match into that. So again, the pros, you're basically adding stability to the banking system. If the banking system fails, that's a big deal, right? That's where we were in 2007 and 2009, because people thought, well, if the banking system fails, what to do, right? That's not good. We see that happen in other countries, and that's one of the attractions of Bitcoin. Is Bitcoin is in effect saying that fiat currencies that are created by and backed by the government have a big chance of failing, where an electronic ledger does not. It can withstand a systemic failure across a financial institution, and in fact, it would benefit greatly from that. So we'll see. Let's see. So helps them stay solvent. Depositors have access to fund, industry standards. Yeah, this a little bit is it gives metrics for the Fed to track about how healthy banks are out there by that. Cons are raised costs. It cuts into their margin, right? They can't loan that money back out. They have to have it sitting in cash. Just like you and I, with that money we keep for our cash flow or our emergency fund, my take on that. But certainly your cash flow money, that is not earning anything. It's just sitting there. When I tell people, money in the bank is like, if you've ever been a boss, that's like, I had a squadron, had 80 instructor pilots, about 100 students, and a bunch of planes. So it's like, if those things are sitting there not doing anything, that's really inefficient for the organization, right? So kind of like money in the bank is inefficient, so you kind of want to neck it down to a small amount. And so of course, same thing from a bank. Cash just sitting there in reserve is earning them no money. So all right, and that's what all that is saying there. So, all right, that's all I've got for you today. Sorry we didn't get a trade. Again, I do like that BOAX. I may have to take a look at that, entering that long today as well. So, all right, that's all I've got for today. You guys have a great weekend, and we will see you back next week.